Hey guys, welcome back to another episode. Today we are going to take a quick look at a semiconductor company that has been really highly requested in my live streams. And this is INDI Semiconductor. They kind of help companies build smart cars. For example, they have solutions for autonomous driving, for connectivity, and so much more. So this is a recent SPAC and kind of went through the SPAC merger. It now has done the merge. But on today's episode, I want to take a quick look at the good and the bad. If this is your first time here, make sure to hit the thumbs up. Make sure to hit the subscribe button. And for those not familiar, I do come with a background of master's degree in electrical engineering, and I do have work experience in the field. So semiconductors tend to be a little bit like my bread and butter. So let's get started. So INDI Semiconductor right now is traded under the Nasdaq as ticker INDI. This was a prior SPAC, but the merger has been complete. We can see from its 52-week high closing of $14, the stock is down about 27.18%. Right now it's sitting at $10.26. It's very close to its nominal value. So for, like I mentioned, right, INDI Semiconductor is a semiconductor company, but they provide mainly stuff for the smart vehicle. So here are some of the solutions. We're actually going to take a closer look at the solutions, and I'm going to explain what are some of the goods and bad I see about them. So the first solution market they're hitting is the ADS, and this is autonomous driving. Then they have the connectivity, user experience, and electrification. So a lot of, I want to say, very high growth market. But before, let's take a quick look at the current fundamentals of the company and some things I'm not too excited about. We always have to look at the good and the bad. If we take a look at the good, right, this is a company expected to grow 54.8% on average for the next 3 to 5 years. This is a company with a very small market cap of about $1 billion. But some of the biggest red flags to me, or yellow flags, are right now this company in trailing 12 months has revenue of about $31 million and has a market cap of $1 billion. Even with huge growth that they are expected, their revenue, for example, at the end of 2022 is expected to be somewhere about $90 million compared to the $1 billion valuation. So things are, I want to say, valuation is definitely one of the biggest yellow flags, maybe even a red flag for me at the moment. But we'll take a quick look at their tech to see if it should be kind of overlooked. At the moment, the company is not profitable, it's not positive in cash flow from operations. So those are some other things to keep in mind of. Financially, this is a company that has strong cash and short-term investments with very low debt. So this is more what I would consider a super early growth story, still in early phases of its business. So for me, if it was to ever enter a portfolio, it would be more of a speculative play, something super small based on the fundamentals. But let's take a look at the actual business. So like I mentioned, they are kind of doing solutions in the autonomous driving right now. But before we take a quick look at all the solutions, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. In the autonomous driving, they create kind of ultrasonic sensors that help with stuff like parking assist. So this is how they're hitting that market. And let me just say, sometimes engineering devices like that, a parking assist sensor, doesn't seem that interesting, but it is needed, right? It's something that's needed very well, especially for all this autonomous driving. All these types of sensors are needed in the vehicle. So right now they are currently shipping these ultrasonic sensors, and they are kind of working on solutions to develop chips for LiDAR and radar sensing, which will include stuff like computer vision and other types of solutions. So at the moment, they have a product and they are developing into new products as well. And to improve their overall LiDAR technologies, they actually have acquired a company, or in the progress of acquiring a company, Teraxion. Teraxion is a company that deals with a lot of lasers and photonic products, and this is actually what's needed for LiDAR. So I think it was a smart move for them to kind of make this acquisition The acquisition is actually costing them about $159 million, so very cheap. In my opinion, 80 million is going to be in cash, and about the other remaining is going to be in shares. So they're not going to completely burn out their balance sheet. They still will have plenty of cash, but they are about to dilute their shares. This is expected to close in the fourth quarter of 2021. Let me say, I've worked with Teraxion before, very strong products, and I believe $150 million for a company like this was a smart move. So I mean, a $1 billion market cap for just INDI, in my opinion, might have been a bit overstretched, but now a $1 billion market cap with Teraxion and INDI as a whole unit, that might actually not scream too crazy of a valuation, in my opinion. Some other things that they're dealing with is connectivity. Here they have stuff like OBD2 interface. So this helps out with just things like vehicle tracking, connectivity, real-time automotive diagnostic, black box events, and data recorders. So with these smart vehicles coming up, they need to be able to kind of show diagnosis within themselves. These applications that they have, or this chip that they have, helps throughout the process. And the user experience right now, they kind of offer a comprehensive suite of lighting solutions. And you might be like, Jose, lighting solutions, what's so special about that? But now with smart vehicles, right, lighting solution is needed for everything from displaying anything to kind of having the user's comfortability and safety. So they are providing stuff like that, and later on I am going to show some of the roadmaps they have. In the electrification that they're talking, this solution is actually the same in connectivity. So the electrification market right now, I want to say this was a little bit of something I wasn't a huge fan. They kind of put the same product in the connectivity and the electrification, and this is pretty much just a vehicle sensor, more like that black box collector and the self-diagnostic chips. So to me, it kind of threw a bit of a yellow flag that they put the same product in the same place. But if we take a look at their presentation, which we are in a bit, they show some of the future products that they are going to be releasing. So now if we take a quick look at their most recent earnings, quarter 2 of 2021, which they reported on August 10th, so not too long ago, revenue grew 148% compared to the same time last year. At the same time, right, those are strong numbers, but this is only $9.2 million of quarter revenue. They did exit the quarter with about $354 million in cash and cash equivalents. Like we saw, they have a nice balance sheet and they're working with it to kind of build up the acquisition of Teraxion. They've also won a new EV product design with one of the largest European automotive tier 1 companies. And that's something I honestly forgot to mention early on. They are working with a lot of tier 1 players. These are a list of their tier 1 companies. You can see a lot of big names in the electrification game, a lot of big companies in the high performance vehicles market, and just a lot of just your typical economical vehicle as well. So they have a lot of strong players, and that's something I forgot to mention. Another thing is they did expand their shipments of their highly on BRD products. We took a look at that earlier today. They also secured record orders for their ultrasonic sensors. Again, those are the park assist, and they ramped advanced lighting controllers with multiple new OEMs. So those were the 3 products that they had, and they are seeing an increase in orders there. So that's a good thing. Again, at the same time, I want to say that valuation based on that small revenue is the only thing that freaks me out at the moment. And I want to say the technology is pretty cool, but I think it could get better. I think we are still in early stages for this business. So we can see in the data and connectivity, they are working in stuff like wireless charging, telematics. This is in the pipeline for them. We're getting a lot of more vehicles where, hey, we want to be able to charge our products through wireless charging. So we're seeing it in a lot of new vehicles. They are working in that right now. In the circle of safety, and this is pretty much more in like the autonomous driving, they're working in stuff like LiDAR. That's why that great acquisition of Teraxion, in my opinion, is going to do well. They're working on edge processor, and they're also working on basis chips. They are also working on enhancing the user experience through CarPlay solutions, infotainment, and LED lighting. So they have things shipping right now. They also have things on the pipeline. In the electrification, this is the one that they still aren't shipping much, but in the pipeline, they have things like charging controllers, diagnostic solutions, and eFuse chips. So in my opinion, this is a semiconductor company still in very early stages. They have some solutions, but the best solutions that they have are on the pipeline right now. So for me, I want to say INDI Semiconductor, very interesting. Still, for me, it would be more of a speculative play. Something if I was very bullish in the smart vehicle market and believe INDI was a huge leader there. This would be a levels I would start a position at right now. But I believe this is going to be a very volatile stock in my opinion. The solutions, like I mentioned, are great. But the ones that seem to really get me excited are the ones in the pipeline, and this is still such a new company in my eyes that I'd rather wait see for some confirmation on how leadership, on how management, and how their engineers work before putting any money into it. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.